Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Stocks jumped Monday as investors clawed back losses from Friday's trading. At the end of the session, all major indices ended the day higher. And it is a hot summer for investors. We're taking a deep dive into the behaviors and outcomes for retail traders. And across the pond, we're speaking with the head of the London Stock Exchange. We're learning more about some of the exchange's wins and losses. Well, retail investors taking a more cautious approach in July, trading activity reflecting what our next guest calls a, quote, measured bullish sentiment. For more, we're bringing out Joe Mazzola, head trading and derivative strategist at Charles Schwab. Joe, it is always great to see you. And we look to you, Joe, for insight into how retail traders are feeling, Joe. So how would you broadly characterize it right now, Joe?
Well, thank you for having me, Josh. Yeah, I think the measured bullishness is probably a good way to characterize it. We saw the stacks go up about 2.75% around that area. So it's trailing the S&P 500 in terms of the bullish sentiment. And what that actually means is we look at the stacks in terms of behavior. And when we see clients, buying calls or buying higher beta names, that tends to push up that stacks number pretty high. So what we're actually seeing right now is we're seeing stock buying, but we're seeing some rotation into mutual funds and ETFs as well too. And when we look at the sectors that have kind of dominated client portfolios in terms of their purchases, it hasn't been information technology, which is what you might assume. It's been more along the lines of communication services, healthcare, financials, and 2 out of 3 of those tend to track at a lower beta than IT. So that's the reason that you see the stacks going up, but you also see it going up a little bit less than maybe what we saw the S&P 500 move in terms of July.
If they're feeling broadly more measured, Joe, what do you think some of the reasons for that would be? Is it economy, tariffs, just the speed of the move off that April low? What would you chalk it up to?
Yeah, I mean, you could throw all those in the cornucopia, but I'll list a couple for you. So I think the biggest takeaway that we got from our sentiment survey that we use in conjunction with the behavior survey is traders and investors just telling us they think IT is overpriced. And even on a day like today, where you get a nice little move at Palantir after the close, which happened to be number 3 on their buy list, they're still, they're very selective in the IT that they're buying. It has to have some type of an AI attachment to it. At least that's what we're seeing, and that's what they're telling us. But then they're also concerned about what the fall could lead in terms of tariff announcements. Now, they're not necessarily changing, their investment style because of that, but we have seen a little bit more hedging activity from clients and a lot less of kind of that upside call buying. We're not seeing nearly as much margin activity. So they're not stretching themselves. I think if anything, they look at this market, they've seen the rally that we've had off the bottom, as you mentioned, and they're using this as an opportunity to kind of trim into strength.
If retail investors are more measured, Joe, to the extent that they would get more cautious ahead, what would be some of the possible implications for the broader market if that happened?
I think the way I would look at this is I would say that when you start to see PEs get a bit stretched, I think that's where clients look to kind of rotate into maybe some unloved sectors. And that's why I said we saw rotation into healthcare. Financials kicked off the earnings season and did really well for the first week or two, but then they were kind of, they kind of got pushed to the back seat a little bit as we were really looking toward tech earnings. That was an area that we saw buy. I just think that it doesn't necessarily mean that the rally's over. I do think, though, that it means that as we move into, what is traditionally, seasonal weakness in August and September, or relative, I guess, seasonal weakness in August and September, clients might be a little bit more cautious if they do start to see markets start to roll over. You might start to see them, pull back a little bit and just wait for a buying opportunity. I don't think the buy the dip trade is over. I just think that, today's a good example of that. But I do think that they're waiting for opportune times.
You mentioned some sectors, Joe, and even some individual names. Any other names, Joe, you would highlight what they've been buying and selling? I'm curious.
Yeah, one thing that kind of caught my attention is the 3 top names were NVIDIA, Tesla, and Palantir. Those are kind of normal, very common on the list. But the one thing that kind of stood out to me is Number 7 out of the top 10 was IBIT. So we're starting to see more clients use ETFs as a way to add exposure to Bitcoin. And it kind of makes sense, kind of given the bullish run that we had in Bitcoin in the month of July. Clients want to participate in it. You do see some call buying there as well too. But 3 out of the 4 weeks, it was on our top 10 list.
I want to ask you, Joe, too, about another thing we've been talking about this show, which, we're talking again about meme stocks, Joe. I'm talking again about SPACs. I'm just curious what you make of all that. Is it fun? Is it concerning? Is it is it an example to you of froth in the market? What do you make of it?
So I will never be one to tell a client what to trade. I mean, that's their prerogative. What I will say from our perspective is when I look at that top 10 list, I didn't really see the meme names residing in that list. Maybe towards the bottom, 20, 25th area, but nothing in that top 10, which tells me a couple of things. Number one, if it is something that we're seeing activity in, it tends to be a trade, Josh, and it's not something that we're holding on to long term. I think the other thing is when I look at some of that upside call activity in some of those names, or just in tech or in the market as a whole, I'm not seeing that call skew. I'm not seeing some of the things that gave me some concern back in June or July of 2024. Where we really started to see some reach from either clients and the market as a whole. I'm not seeing that right now. I don't see the FOMO trade occurring. It's not to say that it can't be around the corner, but as of right now, that's not something that's the case.
Joe, always great to have you on the show. Thank you,
Thanks,
sir.
Josh. You too.
Stick around. Much more Ask for a Trend still to come. The London Stock Exchange Group still on a high following its better than expected earnings, but fundraising from listings has fallen to a new 30-year low. Host of Yahoo Finance's Market Sunrise, Ramzan Karmali, sat down with the CEO.
Very strong first half, 8.7% top line growth, and significant operating margin improvement, which is something we've been working on, really driving efficiency throughout the business. We have had good growth across all of the different businesses that I just ran through. And just a moment on our business model. We have roughly 70% of our business that is recurring subscription style revenue. So very sticky, very stable, and growing attractively. And then we also see roughly 30% of our business as market related or exposed to transaction volumes. And when you see the kind of volatility that you've seen in the first half, we tend to get the benefit from that as well. It doesn't matter if the markets are going up or down. It's when there's activity, volume, transactions, repositioning. Because of the nature of our markets businesses, we see those flows and we see that activity. So a very robust, strong business model with that subscription revenue that's growing well, and then the revenue that's associated with the market. So we refer to our business model as an all-weather model because it tends to work in all environments.
But so far, since the release of your results, the markets haven't quite liked what they've heard, though. The stock is down, I think, around 7% as we speak right now. Why do you think that is? Is there an issue perhaps with growth?
So we have a metric that we call annualized subscription value growth. And we track that. And when we put that out for this half year, it's down a little bit. And we've talked about what that is driven by. And we have had a very modest number of cancellations and a couple other things in the second quarter that took that down a little bit. And over the last few years, it's been going up, 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 up. And so I think the market is looking at that. We have always told the market that they shouldn't focus too much on this metric because it's very sensitive. We see our sales pipeline growing. We see lots of new product coming to market. The business is doing very well across all of our different businesses. So we have a lot of confidence in the direction of travel for this business. But there's a little bit of sensitivity around that.
Let's focus a bit more on the business that perhaps most people know you for, the London Stock Exchange itself. It's fair to say that you're struggling to attract companies. I think the number of listings is at a 30-year low. Why do you think that is?
I think a couple things around this. First of all, the number of listings on a global basis has declined. And if you look in New York, for example, the number of listings is down by 40% over the last, I don't know what the right time, 10 years or so. Listings in other geographic centers have been a real challenge. And that, I think, is in part due to the geopolitical environment over the last several years. It's also because of the availability of private capital. And you can grow into a very large company fully on the backing of private capital. And that has been just a major driver of growth for companies, really going back the last 15 years or so. On top of that, we have had a lot of changes in the UK over the last several years in terms of modernizing and reforming the listings regime here. To be fair, if you go back a few years, there were some rules that were probably overly conservative, that hadn't really moved along with how markets were operating around the world. And these related to things like dual-class share structures. There were approaches to having a very high free float requirement, where if companies could become very large companies because of the availability of private capital, and then when they go public, you tell them they have to have a very large free float, that doesn't make a lot of sense. So we've changed those kinds of things, and we have changed, for example, some of the conditions in terms of getting into the FTSE index, all these different aspects have been viewed as very attractive and helpful. So we are now actually seeing a growing pipeline and a growing number of companies looking to list here, including as soon as next week. So that has been a bit of a challenge over the last few years, getting much better.
But New York has seen a surge in listings in 2025. Recently we found out that the UK online payment company Wise is moving its listing from London to New York. How can you compete globally against these other big houses?
So there are many companies where it does not make sense for them to list or go to New York.
And Wise is a UK online payment
Sure,
company.
but let me just give you a couple of statistics around this, because over the last 10 years, 20 companies or so have gone from the UK and listed in New York and raised over 100 million. Okay. Of that 20, 3 of them, their stock is trading up. Another aspect of some of the challenges of going to New York, a lot of companies, if they're not above a certain size and have I'll say a particularly hot story, they get lost in the U.S. capital markets in New York. They don't get the right attention from investors, from research analysts. And so we've had conversations with companies like that who are actually looking for an environment where they will get the appropriate attention.
Stick around. Much more Ask for a Trend still to come. Stocks closing higher with the S&P 500 and the NASDAQ having their best day since May. Yahoo Finance's Jared Blikre joining us now with the trading day takeaways. Jared.
Thank you, Josh. We got to talk about some record highs in the Mag 7, and I'm going to point to that board in a second here. You know, I was a little worried at the close on Friday. We had that down day. We had a bad reaction to the payrolls report. Things started looking like they were rolling over, but things definitely bounced back today. Here, NVIDIA up 3.6%. That is good for a record high. I'll just show you the intraday or year-to-date chart, and there you see right up there, up 34%. Also, Microsoft up 2.2%. That is up 27% on the year. And finally, Meta up 3.5%. That is good enough for another record high. Recently breaking out from that high that we saw in February. So we don't have all the Mag 7 stocks at record highs. We got Amazon there down 1.44%. And by the way, that did not have a good earnings reaction last week. And it looks like investors are still selling that today. And then Berkshire Hathaway. Berkshire peaked right around the time that Warren Buffett was announcing his departure from the firm at a future date. But you can see it's been trending down since then. It's only up about 1.72%. So all in all, it was a pretty good day for the risk markets.
And we are seeing volatility pick up as well, am I correct?
Yes, we are. And you know, volatility comes in a few different flavors. It comes in realized, that's what actually happened, and then you have implied, that's what people expect to happen. And so if you take a look at what actually happened today, let me just put it this way. I'm going to start with an S&P 500 chart, and I'm going to go back, actually, this is S&P 600. Let's go back about 3 months. And I will highlight the period here is sometime around in here that we had a 1% down day. And then it was like 30 trading days straight where we had no 1% 1% downgrade. That was a low volatility, that was low realized volatility. And then Friday, we had a 1% down day. And then today, we had a 1% up day. So it looks like volatility is kind of coming back. I would remind everybody that volatility tends to trend up from this time of the year. It's late July into mid-October, and that is prime time crash season historically. Doesn't mean we have to have it this year, but that's just a tailwind, or a headwind for the market, I should say. Here is the VIX, and you can see this was a peak Friday. That was kind of scary, but nevertheless, we are down from that. So things looking still pretty bullish, I would say.
Zooming out, what's the latest on that mega AI trading trend?
It is that robo-advisors, AI is trading. And this is an ongoing trend, and we're probably going to see more of this in the future. Admittedly, it hasn't been deployed a lot in the present right now, but I had the chance to speak with Margaret Franklin. She's the head of the CFA Institute, so all CFAs, about 200,000 around the world. And we talked about these growing trends that Gen Z seems to like, and millennials seem to like these robo-advisors. So let's take a listen.
What our data shows, though, is that Gen Z is also very interested in human advice. And why is that? Because AI, prone to high output variability, right? The outcomes you and I could be doing the same thing.
Yeah.
Well, there's hallucinations, but you and I could be looking at the same inputs and coming out with different answers. So there's a high variability. They're pretty skeptical on AI in totality to run everything. So I think what you're going to see is what we call AI plus HI, artificial intelligence plus human intelligence, which is the human in the loop.
AI plus HI. I'll play the human. You can be the human too.
Perfect.
I don't know how it's going to work out, but I guess AI is going to fix that too.
Finally, update on crypto. Should we end there?
Yeah, let's end on crypto. Let's take a quick peek here. This is the one-day view. You can see Ethereum's up 5.8%. Looks like crypto really had a risk on day two. I'm going to give us the three-day view so we can see what happens since Friday. And the numbers go down for Bitcoin, but they went up for Ethereum 9%, Ripple up 10%. That's looking pretty impressive. And if we pull up, let me just do a max chart of Ethereum here. Yeah, still has not broken out of these 2024 highs. So still kind of in this box here, but you got to think if it's ever able to, that these highs at 4,500, those will be easy to beat. The level to beat in here, we're talking about 4,000 or so. So a little bit of upside to go until we hit that, but Ethereum looking good with the stable coins.
Good. All right. Thank you, buddy.
All right.
Appreciate it. Let's take a look at what's trending now. After hours, we're going to start off here with shares of Hims and Hers. Those are dropping after reporting earnings results for the second quarter. Company missing analyst estimates for revenue. They're coming in at $544.8 million versus estimates of $552.1 million. Hims and Hers sees full year revenue coming in between $2.3 and $2.4 billion. The CFO is saying in the earnings release that the company is investing in ways to deepen value for its customers. And ThredUp topping revenue and adjusted EBITDA estimates for the second quarter. Looking ahead, the company providing a better than expected revenue outlook for the third quarter. ThredUp also lifting its revenue guidance for the full year, topping analyst estimates. And Mercado Libre reporting net income for the second quarter that saw a year-over-year decline and missed analyst estimates. Net revenue and earnings per share also falling below Wall Street's expectations. The company, however, highlighting the expansion of its free shipping program in Brazil. For a closer look into the quarter, be sure to catch tomorrow's Yahoo Finance Market Catalyst for our conversation with CFO Martín de los Santos. Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.